I was requested to speak about restoring trust in the financial sector. But to do that, I thought I better give perspective to what sector it was before it got destroyed. Because if we are talking of restoring, it means that trust is no more. Let's go to the next slide. I will be very fast because there's a lot of slides, and then we had one of the best financial systems in Zimbabwe. And I mean it, even comparing globally. We had institutions from the UK. We all know that our sort of system was adopted from the UK system. But we had UK institutions coming into this country to actually learn, and they would marvel at the way our financial system was structured or the way we operated. But what happened is when government freed, so to speak, the system and allowed new institutions to come in, we had serious Zimbabwean bankers coming in to establish banks in the country. These were seasoned, trained men and women of integrity who came in. If somebody else may want to say, I was the first to start a bank in this country in 1991. Started operations January 22, 1991. But after that, these are institutions that were started by indigenous Zimbabweans. And they were serious institutions. I think you can see it for yourselves. I'm not going to read them one by one, but we can see. I think there's about 17 here. Next slide. All in all, we ended up with like 20, thereabout, indigenous banks. And they were serious institutions. The market grew. I remember being told, why do you want to start a bank in this country? This country is overbanked. People were talking technically. It's overbanked. When we started the banks, the unbanked, they previously, and most of them happened to be the indigenous. They were not really considered for banking services. There was a flood. The market grew. We didn't take from the existing institutions. We went into our own people, and the market just grew. And what these institutions did was between 1991 and 2003, if you check those who are good in research, you will find that the Zimbabwean economy, talk of the financial sector, but generally the activities grew rapidly in terms of numbers because these institutions were funding, they provided the much needed funding to the indigenous people. And we helped each other as institutions. Let me dare say today that my own institution, Intermarket, was the anchor to Econet. It was the funding anchor for Econet and many other institutions. And let me also say, CBZ that you see today survives because of Intermarket. If it were not for that, it would not be there. By the way, Dr. Nkosanamo is a banker who also started a venture capital company. We are here together today. I sat on the board of his company. The idea was to promote industry in this country. And we were doing a good job. It was beautifully robust. Brilliant financial system architecture, at that time. That's 1991 to 2003, the wonderful years. Next slide. This was the structure of the Zimbabwean financial system, and this was the structure of the British financial system. Not that we owe them anything, but our structure, this is the Zimbabwean, or this was the Zimbabwean financial structure, or the economy flowchart. It's in three parts. You have the private sector, the other side. I know that you might not be able to read this because of the size. You had the private sector. You had the financial system in the center. You had the central bank, and you had the central government, this side. So the economy is actually in three parts. Private sector economy, the financial system economy, the public sector. And I'm not going to go into the technicalities because of the nature of my talk. But otherwise, whatever this guy here called the central bank does matters to everybody else. If he messes up everybody. The fundings that we can talk about as to how you can get funds and all that sort of stuff, it was all captured in there. For instance, if you were an industrialist and you needed money, and whatever it is you were funding is viable, you could approach your bank, and the bank would not tell you that I don't have money. All they could ask you to do is to sign what we call a bill of exchange, which is an order from you to the bank to give you money. You would actually instruct the bank to give you money. Even if they didn't have the money, they would sign with you that piece of paper, and the bank itself, once they had that piece of paper, they could go to the discount house. That's why it was called a discount house, to rediscount, to get the money to give you. And the discount house would know that if I end up without money because we have shifted money to industry, they would go into the central bank and say, hey, I have funded exports, but I no longer have money today. Can you fund me? The central bank would fund that because it's promoting exports, waiting for the export process to come, and the whole thing would unwind and go back. But there's a lot of it in there. Come 2003, there's a change of leadership at the central bank, started in August 2003. End of 2003, there was an immediate, instant, like instant coffee, instant change to policy from the central bank. And I know that all the years, people had been lied to, that the bankers were like this and that and that. That's fallacy. All those in red disappeared because of change of policy. Go to the next. We can see that, right? There's only three there. Next one. 70% of the 20 or 22 disappeared. Only 30% remained. I said something there. NMB Bank was spared as a reward to the CEO for a congratulatory message. That's how the bank was. And he was called to be told, you are the only one who congratulated me in writing. So, yeah. Next. Okay. Reasons for bank collapse failures in Zimbabwe. It's not me talking. I'm quoting one of our most respected research institutions. They are the ones who said this. Financial regulation and supervision in Zimbabwe, an evaluation of adequacy and options, Zeparu 2013. Those were the authors. These are professors at the university. They were the authors. And here's what they say. Failure of corporate governance, page 42. I don't agree with it, but to some extent, yes. The financial sector experienced the worst financial crisis between 2003 and 2006. They are the ones. Next slide. I just added there is a change of guard at the central bank that time. And that's when they are experiencing the worst financial crisis. RBZ became the weakest link in the country's financial system from a skills point of view, domain technical expertise, integrity, and wisdom. All that disappeared. Veteran central bankers were brutally shifted out of the central bank and replaced by non-bank executives with zero banking experience. That's what happened. What follows? Current crisis, RBZ went quasi-fiscal. It's all in their research. When I read it, I said, yeah, okay. Lender of last resort facility, interbank market, liquidity shortages. This is what they quote, liquidity shortages, absence of an active interbank market. The interbank market, if you recall the economy flowchart, that middle portion between the private economy, the public economy, the central bank, the middle is what they are referring to as the interbank market. They said absence of an active interbank market. It was absent because it was destroyed by the central bank, limited access to affordable external credit lines. You can't export. Absence of lender of last resort compounded the adversity of the domestic operating environment for banks. And yet, for all the history of the country, the lender of last resort facility always existed. It was cut off in December into January of 2004. And of course, the adverse macroeconomic developments, that goes without saying. Once you have destroyed your banking system, that's it, you are done for. Mismanagement at some banks, this is what they say in their findings. I could agree and probably mention 2 banks because we know what was going on there, but the bulk of them, okay, we can move on. Let's move on. Right. These are the findings. It is now accepted that the interventions of the central bank and its quasi-fiscal activities had a number of unintended consequences and in some cases exacerbated the situation against financial institutions. These are research findings. The confidence in our monetary and financial system has been the main victim, and the state can only restore such confidence by moving fast to remedy such blatant breaches. Move on. It is now accepted that the Reserve Bank of Zimbabwe did in fact deal with the financial institutions with a heavy hand. We found the communications between the central bank and financial institutions during this difficult period onerous and dispiriting, onerous for the vitriol and verbal acidity between the central bank and financial institutions. That's how bad the situation became. Okay, let's move on. While Zidera sanctioned, this was now a different researcher now, a former minister. Zidera sanctioned the Zimbabwe financial system. The Reserve Bank of Zimbabwe misdiagnosed the rising economic challenge whose features were novel by attributing the new problem to economic malfeasance by otherwise enterprising bankers and businessmen. This is a separate research. The Reserve Bank responded by decimating the banks and businesses instead of closing ranks to fight off the sanctions together with the bankers and business. That's Magosine Swamani. He presented that report. Hey. All right, next one.
We are giving you an additional 10 minutes.
Thank you. Thank you, sir. Right. The new RBZ authorities' first act on arrival in 2003 was to redeploy all experienced senior central bankers to the periphery. Those of you who were in the country, I wasn't here. I was in the diaspora. They were replaced by non-bankers, people with literally zero banking experience. I think some of you might know it. Let alone central banking. RBZ became a zone of technical ignorance as far as banking was concerned. Evidence, the withdrawal of lender of last resort facility. You see, banking, like we practice it here, we practice what is known as fractional reserve banking. And what that means is, when a bank receives a deposit, they are allowed to keep in reserve just a percentage, say 10%. You give the bank your $100. They are only allowed to put in a savings, so to speak, a reserve of $10 out of that 100. The other 90, they are allowed to lend it out. All right? You can imagine what that does. Because they will keep the 10 and lend 90. So the person who didn't have money now can draw. They are given the money and they can do whatever they want, obviously expecting them to bring it back. That's banking. They can go and fund businesses and everything else. When they make their money, they come and replace the money, right? But it may so happen that at the time that the bank has lent the money and they have got only $10 left, the owner of the 100 comes, says, I want my 100. And the 90 is out there. So the bank can't do that. But because they are allowed to run with that system, therefore the central bank is prepared to offer the lender of last resort to cover that situation because they allow fractional reserve banking practice. I hope I'm making sense. The quasi-fiscal activities and money printing of the central bank, you see, it's not in the nature of money to be free. Once money is free, it self-destructs. That's what we call inflation. But they printed it in sacks. It is not in the nature of money to be free. When free, it self-destructs to a point where it becomes minus. And that the printing instantly translates into spiraling inflation and current crisis that subsists today. Okay, the next slide. Threats, arrests, detentions, victimization of bankers, public trust in the financial system evaporated, confidence in the banking system vanished, banking in Zimbabwe was destroyed by its parent, RBZ, whose task it is or it was to preserve, protect, and guide the sector. The Zimbabwe dollar, our currency, is dead, cause of death, RBZ actions. That is where we are as a country today. We don't trust our own and our own selves. We have no confidence in our children. We believe that money comes from America. So we are running to America. Money comes from Australia. It comes from everywhere else except from ourselves. And everybody is running into Zimbabwe for gold. Money even comes from Mauritius. Can you imagine this? Okay, next one. Okay, What can we do? I thought, let's look at a case study. Germany in 1923, they had a complete currency collapse. And these are some of the things that they did. Let's see whether it works for us. Maybe we can learn from them. What did they do? Change leadership. That guy, renowned, not just an economist, renowned economist and banker, came to the helm of the central bank. But the key is new leadership. We've got a dead currency. I don't know whether we've changed anything. Independent status. The central bank was granted independence. Look at that, allowing it to make decisions based on economic considerations rather than political pressures and limit money printing. That's independence of a central bank. It doesn't mean they are unaccountable. They are accountable, but they are allowed space to operate. The monetary policy framework. Look at that. The central bank adopted a new monetary policy framework focusing on maintaining price stability and managing inflation expectations. Some of the things, we talk about them, us as a country, we are doing this and doing this, but something is missing, even if we claim to do the same things. Next slide. Currency reform, new currency. They issued a new currency. We have done, I think, 8 new currencies. They did it just once. Look at where Germany is. There's something missing. Maybe we are just parroting some of these things, but not actually doing it. They changed their currency, and that is it. That's what they did. And you know what? They even did the gold standard, like we have done with gold coins. Ask me sometime, I'll tell you the source of that, our so-called Zig. I'll tell you how it began. Didn't begin where you think it began. Capital adequacy. Capital requirements for commercial banks, not just generally, but commercial banks, strengthen their balance sheets. This is Germany, to reduce risk taking. Next slide. Supervision and regulation. They focus on the central bank, on the commercial banks, because the commercial banks, among the types of banks, are the ones that have got the capacity to create money. That's why the regulation is like that. Lastly, transparency and accountability. The central bank improved its reporting and disclosure. I put disclosure. I don't know whether we have got disclosure from our central bank. Providing more accurate and timely info to the public and government. It says to the public. Who of us knows what's happening in the central bank? If we want to follow what the Germans did, they disclosed it to the public. Okay, next slide. This is me now just talking. Bank licenses must be issued on merit and merit alone, demonstrated abilities, knowledge, understanding, skill, and integrity. Not because I know somebody. Rebuild and restore the Reserve Bank of old, the Reserve Bank of the Kombo Moyanas, the Leonard Tsumbas. Those were central bankers of integrity. You go to their offices, you have a problem, they will deal with it like men and women of integrity. The qualities of a central bank are relevant, professional, whatever, experience, markets. If you don't understand financial markets, you have no business sitting in a central bank. Talk to me another time. With no commercial conflicts or blemish, domain specialists. Those are the people who should man the central bank. Then we know that we are going somewhere. Next slide. Trust is hard and easily lost, difficult to reestablish, and key to absolutely everything. This was said by this lady here. She's a former contributor to Forbes magazine. It's so true, it's so real. I don't know whether all the efforts we are going to ever do are going to enable us to restore that trust. Because once you lose trust, even Kumbacha, you lose trust, it will be many years I don't even know whether you can restore it 100%. Okay, next one. Let's jump that, but how a startup was funded and became a financial giant. When I started, I think my brother Trevor knows, I was in a probably 24 square meter or less room. But what I did is, I had a powerful project proposal. I went to the likes of Old Mutual. I went to the likes of Zimbabwe Development Bank. When they read the document, every one of them, I mean literally, they wanted to put more money than I wanted. What am I saying? If you've got an idea, that's why I like this whole thing about ideas, my brother, because the idea funds itself. Of course, there are technicalities that we can go through, but if you've got an idea, you have to be able to stand and say, I am money, because that idea is wealth. I had an idea, and I was a startup, if you like, because nobody ever becomes a giant without being a startup. I was a startup funded the way I'm describing, but if you've got a powerful idea, well presented, well documented, don't go to somebody to write it for you. Write it yourself, and then you can consult to polish up your proposal. Pension funds are always looking for investments. They are keen to invest if you've got an idea. Insurance companies, because we were doing it, we were looking for projects. It's not about looking for, these guys will be looking for you. They are looking for projects. They don't even know what to do with the monies that they collect. It's a myth that, oh, there's no money. It's there. We used to have IDC, Industrial Development Corporation, designed then to fund, especially startups, new projects. ZDB, like I said, Zimbabwe Development Bank, before it became what it is. Venture capital, I mentioned Dr. Nkosalamwa, Batana Capital Finance. It was in there. Crowdfunding, somebody talked about crowdfunding. We all know how that works. There are platforms where you can link up, unless they say they don't want to fund a Zimbabwean project. So you set yourself in Mauritius or somewhere, and then you crowdfund, and you can raise your funding for your, and the tax incentives, I think somebody also mentioned it earlier, where government can actually assist, encourage funding the startups by giving tax breaks and all manner of things. So I just listed those, but truly, funding should not be a problem. In our day, if you came to Intermarket, for example, and wanted funding, believe you me, unless your project was useless, you would never walk away without money. Because that's our business. We are in there. How else do we make money? We make money by funding you. Next, is there anything else? Because I think I finished that. You can move on. Thank you.